Tesla stock is soaring higher today, up almost 4% following a blowout jobs report. U.S. job creation in September totaled 254,000, much better than the around 150,000 expectation that Wall Street had. The composition of this is as followed. Education and health services was the leader, 81,000 jobs created. Leisure and hospitality up 78,000. Government up 31,000. Construction up 25,000. Professional and business services up 17,000. Retail trade up 16,000. Financial activities up 5,000, other services up 4,000, information up 4,000, utilities up 3,000, mining and lodging up 3,000, or logging, wholesale trade up 2,000, manufacturing down 7,000, and transportation and warehousing down 9,000. The disparity between what Main Street is feeling and the data that we are getting from the government is continuing to grow. If you ask people about this economy, they're going to say it's not that good. Some people think we're already in a recession. Just go out and ask people. And I'm starting to hear more and more that it's harder to find a job. And that's not reflected in the data that we got today. Now, my opinion, I don't think these numbers are accurate. After all, only about 20% of businesses actually report their hiring and firing for any given month, and then you kind of just estimate from there. So how accurate are these numbers? We'll have to see. There's going to be revisions like there always is, and I'm sure this is going to get revised down a little bit, but Wall Street, they just care about the headline number when it comes out. And taking this data for what it is, let's just say it's accurate, is a really good report and pushes back on that hard landing. But again, I think the data is going to weaken in the coming months, and we'll see if this is really the start of a soft landing or not. But soft landing here, soft landing there, that's what everyone's talking about, and that tends to be positive for Tesla stock. The last thing people are going to do is buy a new Tesla if we're going into a recession or already in a recession, and that's the reason why Tesla stock is rallying 4% today. We did have news yesterday that Tesla's chief information officer did step down. That negatively affected Tesla yesterday, and we're getting some rebound effect today because people are looking around and they're saying, well, we've kind of seen a lot of people leave Tesla recently. Is this anything new? Is this something to be concerned with? And the answer is probably not. I think really the biggest news of the day today is not necessarily that blowout jobs report number or payroll number. It was actually the unemployment rate, which fell from 4.22% down to 4.051%. It was 1/10 of 1 point away from being revised down to 4%. So this was the lowest 4.1% number that you could have possibly had. This was great news considering it's accurate. I should say considering if it is actually accurate. But this really does go to boost those soft landing hopes. Now, the consequence to this is less rate cuts from the Fed. Now, I don't think the Fed is in a position where they want to stop their trajectory towards cutting rates and getting to neutral. Just because a month or two of good data comes out does not mean the coast is clear. And I think the Fed knows that. They would rather be more accommodative right now than wait too long until there's irrefutable damage already done to the economy. Now, forget all of this for a moment, because the biggest thing that's actually going to drive markets higher or lower over the next couple of weeks is earnings season. Because let me just tell you how it is. The government can lie to you. The Fed is kind of mandated to lie to you when it fits their dual mandate. It's kind of like their third unspoken mandate. Lie to the markets when you have to. The only peoples or institutions that cannot lie to you is companies, CEOs and executive board members. They will go to prison if they lie to you. So that's where the accountability is going to really maybe show the weakening in the economy, but we'll have to see. And trust me, it's not that I want to see a recession. It's completely the opposite. Recessions, death, divorce, default is rampant, and that's not something I wish on other people, other Americans, just generalized people as a whole. But I'm a little concerned with what I'm seeing on Main Street compared to what we're hearing and feeling on Wall Street. I'm concerned that over the next coming months, 3 to 6 months, the story could really change and get worse, and the soft landing thesis could be doubted. From an equity markets perspective, the S&P is not really doing as good as you would expect it to do, considering we did have this blowout jobs report and really a blowout unemployment rate. I think that's the big story of the day today. So I think from that perspective, it's fair to say you've kind of already priced in a soft landing. You've already priced in a good jobs market. You could also perhaps say this blowout jobs report is not exactly what the bond market wanted to see. 10-year treasury yields are trading higher by almost 11 basis points today, now to 3.96%. That means you have went from 3.62% to almost 4% on 10-year treasury yields in just the last couple of weeks. This is adding more restriction on what looks like an already weak economy. And at the same time, if you add more restriction to an already weakening economy because of some of these economic data points coming out, then you're kind of raising the odds of an eventual recession because you're now staying more restrictive than maybe it otherwise would have been. Now, we do have some Tesla stock news today, and I don't want to skimp you on that. Tesla has discontinued the Model Y rear-wheel drive in the UK and replaced it with the Model Y rear-wheel drive long range. Elon Musk somewhat dropped a bombshell as well today that FSD will soon exceed 10,000 miles between critical interventions, which is a year of driving for most people. Now, that is a very bold claim, but if Tesla gets anywhere close to that, they're going to be able to operate a robotaxi network and get approval for that. And that would suggest a dramatic increase in the reliability, sustainability, and safety of FSD from where we are today. Elon Musk also does confirm that a smoothness upgrade is in the works for Hardware 3 vehicles. Tesla is officially honoring the original $7,000 FSD price for early Cybertruck reservation holders. And Tesla has now released pricing for all the options on the non-Foundation Series Cybertruck. Deliveries of the $80,000 Cybertruck officially begin this month, with estimated delivery times between October and November of 2024. But this $80,000 Cybertruck does not yet qualify for the $7,500 individual point of sale federal EV credit that some of the other Tesla models might get, but it does apply for the $7,500 commercial tax credit in the US. And it's being reported that Tesla has started assigning VIN numbers for non-Foundation Series Cybertrucks. Tesla has also introduced new inventory discounts for up to $2,500 off in the US for the following models: the Model 3 long range rear wheel drive, Model 3 long range all wheel drive, Model Y long range rear wheel drive, and Model Y long range all wheel drive. Try saying that 3 times fast. In more bad news for the overall auto industry, Rivian says it delivered 10,018 vehicles in Q3. Wall Street was expecting 13,000. Rivian also lowered its 2024 production target to 47 to 49,000, down from 57,000. And this is what Rivian had to say. Quote, Rivian is experiencing a production disruption due to a shortage. This supply shortage impact began in Q3 of this year, has become more acute in recent weeks, and continues. Which I would kind of argue at this point, it just shows the exceptionalism of Tesla. When you have GM deliveries that were down 2% quarter over quarter, you have Rivian deliveries that are down as well. I'm not sure the exact figure, but they're down quarter over quarter, or year over year, quarter compared to last quarter. And Stellantis, that is literally just collapsing. I mean, their deliveries are down 20% year over year comparing Q3 2023 to Q3 of 2024, yet Tesla's deliveries were actually up almost 7%. Waymo and Hyundai announced they have entered into a multi-year strategic partnership that will see Waymo adding Hyundai's INQ5 EV to its robotaxi fleet. It's also being reported that 575 Tesla Cybertrucks are registered in the state of Illinois, according to the Secretary of State's office. In other news, it's being reported that Tesla is planning a $783 million debt offering backed by car leases from prime borrowers, Bloomberg reported on Thursday, citing a person familiar with the matter. Option activity in Tesla stock today from institutional investors continues to be very positive. You have seen 101 different trades today, totaling $25.07 million, with a positive order value of 82%. And short sellers are back to covering on their short positions. You have almost 300,000 shares today that are being covered on. You have return shares of 324,000 and borrowed shares of about 55,000. Overall, short interest of free float continues to decline, now down to 2.77%. You do have $18.5 billion currently sold short in Tesla stock, totaling 76.87 million shares. Sentiment for Tesla today is rising sharply into extremely bullish territory, coming in at 80. Yesterday, you were bearish at 39, so sentiment has jumped big time. Message volume today is high at 66. Yesterday, it was high at 61, so improving there. Participation ratio today is high at 55. Google Trends data for the Tesla lineup actually continues to weaken. The Cybertruck now down to 40, the Model Y at 21, the Model 3 at 20, the Model S at 10, and the Model X at 7. Tesla continues to run about 4,000 different ads with Google. Global inventory numbers are skyrocketing over the past couple of days for the Model Y, now back up to 6,900, the Model 3 up to 4,000, the Model X at 3,300, and the Model S at 2,100. The percent of stocks currently trading above their 50-day moving average is rising today, up to 58.3%. That means about 4.6% of all stocks today, almost 5% of stocks, are breaking above their 50-day moving average. That's a pretty good day. CNN's Fear and Greed Index is also moving higher today from yesterday's greed at 67 up to almost extreme greed today, but still on the high end of greed at 73. In the next video, we will provide a more in-depth breakdown of the technicals on Tesla and what that is suggesting is coming next for Tesla stock. But that is going to go ahead and conclude this video. Hit that like button as well as subscribe to the channel if you have not done so already. You guys have a great rest of your day, and I will see you in the next one.